The GST Council on Thursday approved 4 main tax slabs ranging from 5 to 20% under a proposed goods and services tax, while there will be 2 standard tax rates, that is 12% and 18% under the GST. Half of the items in the consumer price index would not be taxed at all to safeguard the interests of the poor.
The all-powerful GST Council on Thursday decided on the 4-tier GST tax structure of 5, 12, 18 and 28%, with lower rates for essential items and highest for luxury and demerits goods that would also attract an additional cess. With a view to keep inflation under check, essential items including food grains, which presently constitute roughly half of the consumer inflation basket, will be taxed at 0 rate. The lowest rate of 5% would be for the common use items, while there would be 2 standard rates of 12 and 18% under the goods and services tax regime targeted to be rolled out from 1st of April 2017. Announcing the decision arrived at the first day of the 2-day GST Council meeting, Finance Minister Arun Jaitley said that the highest tax slab will be applicable to items which are currently taxed at 30 to 31%.
That there will be a 0 tax rate in which several items which approximately constitute 50% of the consumer price index basket would be included. We don't call it the exempted items, we'll call it the 0 rated items. And it was decided that food grain used by common people would be in this category.
Luxury cars, tobacco, pan masala and aerated drinks will be levied with an additional cess on top of the highest tax rate. The collection from this cess, as well as that of clean energy cess, would create a compensation pool which would be used for compensating states for any loss of revenue during first 5 years of implementation of GST. The pool would be lapsable after 5 years. 50,000 crore rupees would be needed to compensate states for loss of revenue from the rollout of GST, which is to subsume a host of central and state taxes like excise duty, service tax and VAT in the first year. Fitment or categorization of items for each slab will be done by officials and will then be approved by GST Council. The tax rate agreed upon must be now approved by the Parliament, which meets from November the 19th for the winter session. Parliament has to pass 2 bills related to GST in the winter session to be on track to roll out of the new indirect tax regime.
In a major breakthrough, the GST Council decided on the GST rates and on the mode of compensation for the states for implementation of GST. Now the issue of cross-empowerment is left, which will be discussed on Friday. The government hopes that by 22nd of November all issues will be sorted out, and this will help in implementation of GST on the decided date, that is 1st of April, year 2017. With camera person Prem Parihar, Siddhant Sibbal, DD News, New Delhi.